Hello, everyone. Welcome to the market opening bell on Friday, May 2nd. Let's review the Hong Kong stock market's performance on Wednesday. Hong Kong stocks opened higher, tracking Wall Street's gains. The Hang Seng Index opened 30 points up, but dipped 159 points to 21,848 in early trading. In the afternoon, it rose 121 points to 22,129. The index closed up 111 points or 0.5% at 22,119. The X-share index gained 8 points or 0.1% to 8,076, while the Hang Seng Tech Index rose 67 points or 1.3% to 5,087. Total market turnover was 201.5 billion Hong Kong dollars, up from 177.6 billion Hong Kong dollars the previous day. Technical analysis: the Hang Seng Index remains within its short-term range of 21,800 to 22,300, but technical signals show slight improvement. A small bullish candle appeared. The 9-day relative strength index rose to 55 and turnover exceeded 200 billion Hong Kong dollars. Overall, the market awaits a breakout. Mainland Chinese markets showed mixed performance on the last trading day of April. The Shanghai Composite Index fell 7 points or 0.2% to 3,279. The Shenzhen Component Index rose 50 points or 0.5% to 9,899. Combined turnover for both markets was 1.169 trillion yuan, up 147.2 billion yuan from the previous day. The renminbi central parity rate rose for the fifth consecutive day, hitting a three-week high of 7.2014 against the US dollar, up 15 pips from the prior day. Onshore and offshore renminbi spot rates strengthened, reaching 7.26 in early trading. The National Bureau of Statistics reported April's manufacturing PMI at 49, down 1.5 points from March, ending 2 months of expansion and entering contraction. For China manufacturing PMI was 50.4, above market expectations of 49.7, but down 0.8 points from March, marking a 3-month low and signaling slower manufacturing growth. US tariff hikes impact external demand, with new export orders falling into contraction for the first time since August 2023. Weak external demand led to soft overall demand, with the new orders index barely above the net neutral mark. Employment contracted again, prices remained subdued, and manufacturers' purchasing appetite weakened, with market optimism notably fading. The official non-manufacturing PMI was 50.4, below the expected 50.6, down 0.4 points from March, but still above the neutral mark. Now let's look at April's sales results for some automakers. BYD sold approximately 380,100 new energy vehicles in April, up 21.3% year-on-year, flat month-on-month. January to April sales total 1.38 million units, up 47% year-on-year, achieving 25% of its 5.5 million unit annual target. Leapmotor delivered 41,039 vehicles in April, up over 173% year-on-year and 10.6% month-on-month, the only domestic new force automaker to exceed 40,000 monthly deliveries. January April January to April deliveries total 128,591 units, with an annual target of 500,000 to 600,000 units. Xpeng delivered 35,045 vehicles in April, up 273% year-on-year and 6% month-on-month, maintaining over 30,000 monthly deliveries for 6 months. January to April deliveries total 129,053 units, up 313% year-on-year, reaching 17% of its 760,000 unit annual target. Li Auto delivered 33,939 vehicles in April, up 31.6% year-on-year, but down 7.5% month-on-month. January to April deliveries total 126,803 units, achieving 18.1% of its 700,000 unit annual target. Xiaomi also delivered over 28,000 vehicles in April, roughly flat month-on-month. January to April deliveries exceeded 97,000 units, reaching 32.3% of its 300,000 unit annual target. NIO delivered 23,900 vehicles in April, up 53% year-on-year and 58.9% month-on-month. January to April deliveries total 65,994 units, up 44.5% year-on-year, achieving 15% of its 440,000 unit annual target. Geely Auto sold approximately 234,100 vehicles in April, up 53% year-on-year and 0.8% month-on-month. Its its new energy vehicle brand Seeker sold 13,700 units, down 15%, while Link and Co sold 27,600 units, up 47%. January to April sales total 937,900 units, up 49% year-on-year, achieving 34.6% of its 2.71 million unit annual target. Great Wall Motor sold approximately 100,000 vehicles in April, up 5.55% year-on-year and 2% month-on-month. New energy vehicles sales were 28,813 units, and overseas sales were 32,165 units. January to April sales total 356,900 units, down 3.6% year-on-year, achieving 8.9% of its 4 million unit annual target. Let's review the US stock market performance over the past 2 days. On Wednesday, markets were highly volatile due to negative US economic growth in the first quarter. The S&P 500 index fell over 2% at one point but closed up 0.1%. The Dow Jones Industrial Average plummeted nearly 800 points during the session, dipping below 40,000 but ended up 141 points. One reason for the rebound from lows was a report from Chinese media stating that the US had proactively contacted China to negotiate tariff issues. US stocks continued to rise on Thursday, with the Dow and S&P 500 marking their eighth consecutive day of gains, the longest streak for the Dow in a year and for the S&P 500 since August last year. Strong earnings from Microsoft and Meta alleviated market concerns about AI spending, boosting the Nasdaq's performance. The Dow rose as much as 430 points to 41,099 but closed at 40,752, up 83 points or 0.2%. The S&P 500 broke through 5,600, closing at 5,604, up 35 points or 0.6%. The Nasdaq surged nearly 3% at one point but ended at 17,710, up 264 points or 1.5%. The Golden Dragon Index, reflecting Chinese concept stocks, rose 14 points or 0.2% to 6,929. Microsoft jumped nearly 8%, hitting its highest level since late January, with its fiscal Q3 2025 results exceeding expectations across the board, driven by strong cloud computing performance. Meta rose over 4% with advertising revenue outperforming forecasts. Amazon climbed over 3%, Nvidia gained more than 2%, and Google rose over 1%. Tesla underperformed, with the company denying reports that its board had begun searching for a successor to CEO Elon Musk. On the economic data front, the US Q1 GDP contracted by 0.3% quarter-on-quarter, missing market expectations and marking the first decline since 2022, driven by a surge in imports ahead of Trump's tariffs and slowing consumer spending. The ADP employment report, often called the Little Non-Farm Payroll, showed only 62,000 jobs added in April, below the expected 115,000 and the lowest in 9 months since July that last year. The March PCE price index was unchanged month on month, up 2.3% year on year, while the core PCE price index was flat month on month and up 2.6% year on year. The April ISM manufacturing index came in at 48.7, above the expected 47.9, but down from 49 in the prior months. Within the index, new orders rose to 47.2, above the expected 45. Employment climbed to 46.5, above the expected 44.6, and selling prices increased from 69.4 to 69.8, though below the expected 73, indicating moderate price pressure. Initial jobless claims for the prior week reached 241,000, the highest since October last year, surpassing the expected 224,000 and the previous week's 223,000. According to Challenger Gray and Christmas, April layoffs total 105,000, down 62% month on month, but up 62.7% year on year. The firm noted that while government layoffs remain a key factor, layoffs were observed across various industries last month. Our stock pick today is RoboSense, stock code 2498. RoboSense is an AI-driven robotics technology company providing advanced, reliable, incremental components and solutions for the robotics industry. The group focuses on chip-driven LiDAR hardware while developing AI-powered perception software to form comprehensive solutions, driving applications in automotive, robotics, and other markets to achieve large-scale commercialization. Its main businesses include: 1. Sales of LiDAR hardware products for ADAS, robotics, and other non-automotive industries, such as cleaning, logistics, industrial, public services, and inspections. 2. Sales of LiDAR perception solutions integrating LiDAR hardware and AI perception software. And 3. Technical development and other services. For the year ended December 31st, 2024, the group's LiDAR product sales totaled approximately 544,200 units, with 598,800 units for ADAS applications and 24,400 units for robotics and other products, representing year-on-year increases of 109.6%, 113.9%, and 47% respectively. In 2024, the group's revenue reached 1.648 billion yuan, up 47.2% year-on-year. Losses attributable to shareholders significantly narrowed from 4.336 billion yuan in 2023 to 481 million yuan in 2024. Gross profit surged 202.8% to 283 million yuan, with the overall gross margin improving from 8.4% in 2023 to 17.2% in 2024. The gross margin for ADAS LiDAR products improved dramatically from a 5.9% loss in 2023 to 13.4% in 2024. In early 2025, the group launched new products for automotive and robotics markets: EM4, E1R, and Airy. The EM4 is the world's first 1,000-line ultra-long-range digital LiDAR, with 1,080 lines and 600-meter detection range, securing partnerships with multiple domestic and international automakers. The solid-state digital LiDAR E1R and hemispherical digital LiDAR Airy are designed for the robotics market, widely applicable to autonomous navigation and task operations. With accelerating penetration of intelligent driving and the booming robotics industry, demand for LiDAR sensors and integrated perception solutions is expected to grow significantly, creating strong prospects for the group. Recommended recommend Recommended buy price 37 Hong Kong dollars, target price $40, stop loss $35. I do not hold the above stock.